In some of the other videos for the forex specific indicators, we were looking at the pound in particular and the strength of the buying. And I just wanted to record this quick video for you, which really brings it all together, because on the left we've got the currency strength indicator, in the middle we've got the currency matrix, and over on the right hand side we have the currency array. This is on, and they're all on the same time frame, so this is all 15 minutes, so we are comparing like with like, if you will, apples with apples. Over on the left hand side on the CSI, you can see the strength of the yen selling. The line is very steep, so we know it's strong on this particular time horizon, and you can see the equivalent buying in the British pound. We've had some little blips here and there, but that buying is still continuing. We're still climbing up into the overbought region, not done yet. And likewise with the Japanese yen down at the bottom here, the selling is still not done. We've maybe got some way to go, but we are getting very, very deep into oversold and overbought territory. But this really does highlight the strength of the trend that you see over here. The reason this trend is so strong, it's so steeply inclined on the currency array, is purely because of the strength of buying and selling in that particular pair. And this is what you're looking for the whole time. You are looking for strong buying, strong selling, which will deliver you a very strong trend. You will get trends from, as I say, from what we call asymmetrical sentiment, where perhaps you've got one which is rising strongly and maybe the counter currency is perhaps flat or maybe even rising gently with it. But you will never see a strong trend unless you get this divergence, this complete divergence. It's almost a mirror image here, where you've got strength above and weakness below, and that's what's driving the pound yen, and it's really rampaging higher. You can see it on the matrix here. This number is really, really going high. It was not quite at this level before. It's, where are we? All-time high is 76, so we even got some way to go. The average high is 59, so you can see how strong this is. It's really moving well. What's interesting when we look at the matrix is the other pairs are perhaps not where we would expect to be. I mean, if you look at just the numerical value, 70 up here, this is really high, very, very strong, big widespread up candle on the daily chart. But down here, this is almost half. So what's driving this particular pair, beware, this is not particularly being reflected in these other pairs down here. So the pound yen, if you like, is really out on its own. It's really developed this very strong trend all by itself. Yes, we've got buying in the pound on these other pairs down here, but look at the numerical value on the cable. It's 4 as opposed to 70. So clearly, this is not following in the slipstream, if you will, of the pound yen. Over here, we've got it. We can see it. It's very strong, very steep. Continuing. We're up into overbought on this particular time frame. We haven't actually reached the overbought condition yet. We have there on, just saw it flashing on pound New Zealand. We are awaiting the potential for a reversal here because we're in dark blue with the brackets around, if you remember, and then it will go to that. It's flicking on and off. It's just at or around about that sort of region now. So when it gets that, there we go. It's now flicking on. So it's getting to that point where it's very, very strongly overbought. And it's no surprise to see it after such a strong move. You are constantly looking for, at the very least, congestion and possibly a short-term reversal based on profit taking or changing sentiment in the market. But I wanted to record that for you. It's a really nice example, fascinating insight into using the three indicators together. Hope you've enjoyed this particular video. Lots more to come for the Tradestation platform. So thanks for watching and see you again soon, and bye for now.